Hi everyone, welcome to another episode with me Shashank Godappa, and today I'm going to address a question that many people are asking me, that Shashank, what's going on with gold? What do we do with gold? Is it going to recover? And what about silver as well? So today I'm going to talk about both gold and silver, what I believe is going to happen. But before I even start this video, one small request for all of you guys. If you like the content of this channel, please click on the subscribe button. Nothing else I want from you, so that we can grow this channel and make it a much bigger channel to reach more audiences. Chalo, without wasting any more time, let's quickly begin. So look, gold has fallen down quite a bit from the top of 5,600 and now it is trading at 4,100. Gold has in fact fallen by 25%, and that is a very big fall that has currently happened with gold right now. Now, if you remember, when gold was at the top at this point, I don't know how many of you will remember this, but when gold was at this point right at the top, I remember seeing all these different big global houses. You know what they were saying? Shashank, the gold is at 5,400. We predict 6,000 gold. We predict 7,000 gold. We predict 6,500 gold. Nobody predicted 4,000 gold. Okay, this goes to show you that nobody knows anything in the market, because I remember at that time Goldman Sachs, all these big people, JP Morgan, Goldman Sachs, they were all predicting that gold will go reach 6,000, 6,500. And whenever such bull case narrative starts, lot of over positivity comes into the market. For example, tabhi China to abhi kharid lega, China is buying gold, everyone is buying gold. Now I agree, everyone is buying gold, and I agree that they will continue buying gold in the future. But most important for all of us to understand is, boss, market cycles. Please understand that gold is not a stock. It is not a commodity that can usually go up so much. Yes, gold definitely has a pattern, and I will show you the pattern. You will only understand next time when gold rallies till where it might go. But this is something many people did not understand. Let me show you an example. If I turn this chart into a monthly chart, okay, this is how it looks like. See, I've already done the analysis in the past, but you can see here, this is monthly chart of gold all the way back from 1967, 1970. So gold always has this parameter where it goes up. Okay, it went up 4x. After it went up 4x, gold had a correction of 50%, 45%. After that, gold again went up 7x, and after that, from the top, gold had a correction of 71%. Same way, after that, gold again went up to around 6x, and post that, gold again fell down back to 46%. Again, after that, gold over time corrected and then went up here, went up 72%, then corrected. Now it's up 379%. This is what is happening with gold. It has been the same pattern again and again that's played out. Every time gold does a major rally, it usually corrects by 40 to 50%, which is great, right? And another thing, a lot of people get confused with the euphoria. By the way, this is data. I am not making this up. This is not my rules, okay? If you also look at one very interesting factor, which many people forget to look at, is that gold consolidates a lot after a rally. If you look at gold here, look at this consolidation period. This is from 1977 to 2009, okay, post the housing crisis till 2009. From 1977 to 2009, gold did not break out from its zone. It has been in the same zone since that time. And if you see this period, when it went from 2010 rally, after the 2010 rally got over, gold broke its next position only in 2024. So from 2010 to 2024, gold did not break out, nor did it move. It was pretty much flat. It was at $1,800, fell to $1,000, and then from $1,000 it broke 1,800 only in 2020, and this was since September 2011. So that was a 9-year consolidation where zero returns were made in gold. Absolutely zero. Obviously, none of you guys cared about it at that point. And then again, it went up, did a massive rally, and now it is showing signs of correction and showing signs of cooling off. Because if you look at gold, even on a monthly chart, the extension from the 20-day moving average was also quite high. If you look at gold, right, and if I look at it from the extension standpoint, extension is going away from moving averages, and whenever anything, whether it's a commodity or stock, goes away too much from the moving average, it is called ATR extension, and it is usually not a good sign, and that is when mean reversion happens, when the stock or commodity has to come back and touch the moving average. Now this is the exact same thing that happened. You can see the same thing happening here as well. Over here also in September 2020, it went up 22% above the 20-day average, fell down and then came down. Same way here, it went up 41% above the 20-day moving average, came down and fell down. And right now, gold has, I would say, started correcting. It has taken a support from the 20-day moving average. Now we have to wait and watch whether it will again go beyond 5,500. But I believe now, I think it is going to, maybe, I don't know the future, I will not try to predict it, but looking at the past signs, I feel gold should consolidate a bit. Okay, because both sides of the coin are playing out. Number one is that central banks are still buying. They've understood the concept of de-dollarization and they've understood the importance of gold. Second, wars have gone down, so there's no actual big demand from other people to buy gold. Second, India, which is one of the largest buyers of gold, we had our import duty increased by 10%, so we can't buy a lot of gold, right? And that is the assumption, that we can't buy a lot of gold. And gold has actually fallen down a lot. In fact, from, as I told you, it has gone from 5,500, it has gone down 25%. Now, according to history, whenever I look at history, I would say 30 to 40% is a very good buying range. Whenever gold falls down from the top, 30-40% is a good buying range. Right now, we are down 25%. In the last week, we were down 25%. If you see it till here, it was down 26%. Means this is a zone of buying. Like 26%, 30%, 35%, I usually would. I'm not talking about buying this chart. I'm just saying it is a good time to start accumulating it and also understand the nature of gold. It has already given a very good rally. There's a very high chance that we will consolidate for 4, 5, 6, 7 years, right? Very good chance, unless another big war breaks out or something like that. Touch wood, nothing happens. If that happens, then we might see a very big rise again happening with gold. If you look at the gold price history, I look at usually this one. If you look at the gold price history, you can see the trends here for 22 carat. You can see that the 22 carat gold, which was 14,355 that month, is now at 13,520. Now, obviously, if it falls down more, it's still good. The more it falls, the better. But the problem with our audience is they only want to buy at the top. Now it has fallen down 25%. Nobody wants to buy gold. I thought it was a long-term hedge of life, right? So a lot of people don't want to buy gold. And this is where I come in, right? I buy physical a lot. So I bought 22 carat recently, right? Delivered on 2nd July. So I don't wait. I know the import duty is also 10%. I know there will be a slight loss, but I will to keep buying because for me, it's come in my zone of buying. I don't buy ETFs. I don't buy these things. I usually prefer buying physical, but I store it at home, right? At my locker or whatever, I store it because for me, it is not a speculative instrument. For me, I know why gold is there. Gold is a hedge against inflation. Gold is a hedge against long-term volatility, and it is not a stock. Stock, I have enough, right? So this is only for that kind of an hedge. So I believe that we will go into a consolidation unless a big problem or a big, issue basically happens in the world. Now you come to silver, okay? Same analysis quickly we'll do on silver. Now silver, as you can see here, I was doing some analysis and trying to read. The silver's volatility is absolutely crazy. You see how gold was and you see how silver is, right? Silver also does the same movements, okay? It went up 300%. After going up 300%, it fell down 50%. Again, after that, it went up 1000%, which is almost 10x. But then from that 1000%, fell down 90%. Okay, same way, again, it went up 196% and then again fell down 66%. This is not a hedge, right? Silver is not a hedge. Silver is a very simple, like an industrial commodity where when there is demand, it is great. When there is not a supply, it falls down. When the demand dies, it falls down. But the usual drawdowns of silver, the average drawdown of silver itself is 60%. Okay, 60% is average drawdown of silver from the top. Everywhere I see 40 to minimum, 60 is the highest. Okay, and now we have started declining from this top because we have gone up from here to here. We have gone up 647%. And now we are seeing it already, it's fallen down 55%, which means very good. That means it's already fallen down 55%, means we're almost at the bottom. Maybe it can go 65-70%. Hopefully it'll be somewhere around 50-day or 100-day. So anywhere between 50 to 100-day, it can take support, but it has done the fall that it's supposed to do. But many people investing in silver don't even know this logic because they have not seen it in the past. Everyone wants to buy silver at the top, silver at the high. Now I know a lot of people called me, Shashank, I bought silver bars recently. What do I do with this silver bar? I said, why did you buy it? You could have bought gold, na? Because see, gold's chart is more smoothened, right? It is more smooth. It is not that deep, right? The corrections are not as deep as silver. And tomorrow, if gold and silver both have to go up, gold will always go up more, right? Because gold is always going to be a favorite for individuals plus corporate reserve banks, everyone, right? So that is what, a lot of people don't do this simple analysis. And I'll show you something. Let me add silver over here. Yeah, see, this is how gold and silver look like. So gold is at 156 lifetime and silver is at 107. This is what I was saying. So gold will always outperform silver and they also work very closely. Look at this. They work very closely, right? But here the distance became quite close and that's why it'll fall more. But this is how they are. This is how the correlation is. So for all the people who are asking me gold versus silver, Shashank, what do we do? Me personally, I am a believer of buying gold for hedge for long term. If I ever need the money, I would go and pledge the loan. I would never sell the gold. I would always go put the gold as a gold loan. I'll never like selling my assets. I would take a loan on the assets. Even my houses, I would like to put it on mortgage and take a loan if I really need it. But I would not want to sell the assets because assets will keep growing. But a lot of people bought gold and silver as a speculative asset. They thought it's a stock that we can go buy and it'll go up 30-40%. Please don't buy like that. See, a long-term buyer has no problem with gold or silver. He doesn't even need to look at the prices daily. In fact, someone like me, when it falls down, I'm going and running to the store to buy some. Not when it's going up. When it's going up, I'm like, let it go. No problem. It was 4,000 5 years ago. Now it is at 13,000. So it's actually gone up quite a bit. But for someone like me, I would wait. So I keep looking at offers even now. Whenever something comes up, very interesting comes up, I quickly go and lap it up. But yeah, for gold investors, don't forget that it's a hedge. It's not a speculative instrument. It might fall more. It might consolidate. But if you look at it from a 10-year cycle perspective, play for the next cycle. ये cycle तो pretty much हो गया. I would say honestly play for the next cycle and next cycle will actually do well. But again, if you have any doubts, any questions, let me know. A lot of people ask me this question that Shashank, would you buy a gold ETF, gold mutual fund, or a gold, or a gold physical? I think to each his own. Okay, I think everyone has their own perspectives. To each his own. I'll tell you why I buy physical one for 2-3 reasons. When gold ETF is there, I don't buy mutual funds. I prefer not buying mutual funds, but ETFs is better. But if you have a lot of money, then you can't buy ETFs because liquidity concern will be there. You better buy a mutual fund. But for me, ETFs are very easy to sell. And let's say some really bad news comes tomorrow, I might just go and sell it off in the ETF. I don't want that instant liquidity. Property and gold, I would prefer not having instant liquidity. Stocks are okay because it plays with your mind. So what I do is I buy the physical gold. Yes, that is making charges, GST, 2-3% you have to pay extra, right? Maybe even 5%. Chalo. I don't care about 5% because I'm holding it for a long time. Right? I will buy at today's rate at 13,000. I might sell it at 30-40,000 in the future. I might not ever sell it, but let's say 30-40-50,000 when it goes. If I really need the money, I will pledge it and take some gold to loan value and I will take that. Right? The goal is to pass it down to the next generation because if I ever need liquidity, I can go pledge it and take it and take some loan and clear from cash flow. Right? That is how it is, right? So for me, I would take it, put it in my locker, put it in my home, keep it safely hidden, and that is how I would keep it because it doesn't tempt me from growing and sell. So as I said, to each his own. If your temptation is okay, gold ETFs are better. I get tempted a little bit, so I would prefer putting it in my bank locker. But again, I hope you guys enjoyed this video and like this video. It's only for educational. Don't get too confused. If you have gold, no problem. It's not wrong that you hold gold. Even if you bought gold right at the top, absolutely fine. Don't worry. Play the long game. That is what gold is used for. Again, I hope you guys enjoyed this. And if you did, please click on the subscribe button so that I can grow this channel and meet more people in the future. Okay. Thank you guys. Take care. See you. Bye-bye.